All right, so are we getting ready for that year-end rally? Some like to call it Santa rally. Some like to call it the year-end rally. But at ET now, well, we would call that as the Happy Diwali rally. Yeah. Are we getting ready for Happy Diwali rally, which may start in Diwali and could extend to Christmas? Atul Suri joins us, and let's take that conversation forward. Good morning. Thank you for joining us.
Good morning. Nice
Exactly a week ago, we said TGIF. Thank God it's Friday, because global markets were messy. Today we are saying why it's Friday, because global markets are looking solid and they're looking decent.
Yeah,
do you think that storm or the mid-air turbulence is over for us, and are we getting ready for a, in your terms, Santa rally?
Well, I think it's been very positive. See, Nikunj, one must consider that a month ago, almost a month ago, 6th of October, we had this whole Hamas-Israel issue that cropped up. And things went, we do not know the collateral damage, how these things spread. And in the hotness of the moment, a lot can happen. And that's represented by crude. Crude was around $82, $83, Brent. It went to 95. It was almost a 15% up move in crude, which is nothing but a reflection of how bad it could get. But now crude is back to 86. So if you look at it numerically, I think this gives us a sense that actually the world has dodged a bit of a bullet. Yeah. Because this thing could be big. Because, Israel is a bit of a quasi-US representative. So from that point of view, I think that's a very big digestion. Now, what has happened is that you'll find global markets have corrected 10, 11, 12%.
Okay.
Plus, you've had the Fed issue, which we'll talk about later. But I think we've digested a very big bad news. And I think that the markets are recovering, which is giving me confidence that in the overall scenario, we are in good. That is a typical reflection of a good, strong global market. That's such big bad news. It's a war. It's a war that's happening out there. And that is getting absorbed. And today, even if you look at something like the US, which corrected about 11%, SPX is about 7% from lifetime highs. And if the momentum continues, I don't see why we shouldn't get to higher levels.
So we've dodged a bullet, but does that mean that we are ready to run, or we still will be walking?
I think that now the attention, once this thing kind of settles, which I think it has, it will move back to the Fed. Now, if you look at the Fed's action the last few days, the issue being inflation. The issue is inflation. If inflation remains cool and whatever, the variables that get into it, you will find that happening in bond yields. So just as we spoke about Brent crude, I think we now need to go back to bond yields. What you're seeing in the last 2 days or 3 days is nothing but a bond yield that went to almost tipped 5. Yeah. Right? And now we are back to 4.66 or thereabouts. I think we'll get to around 4.3, which I think is great. Because it's not that you're expecting it to fall off massively, but I think that the further we are away from 5, it is really good. And I think it's all about narrative, etc. But I do think that markets are oversold. They are due for a bounce. The quantum of bounce is really going to be based on news. And news is kind of ever flowing, especially as far as the Fed and inflation, etc. go. So I would like to point out one thing. One big takeaway for me in this whole correction is that again India has fallen less than global markets. The SPX fell 11%, we fell 7%.
It's a bull market correction, very savage, very sharp. Before you realize correction it started, it actually gets over.
Absolutely. So the fact is that we have fallen less, and let me surprise you that what was thought to be an absolute bubble in Indian stock markets was small caps. Small caps have fallen less than Nifty.
Yeah, in fact, from Thursday's lows, Nikunj, the small cap index has rebounded 6.5%.
It fell 5, it is up 6.5, which means the net neutral impact is actually 1%.
Absolutely.
So Atul, for next 3 months, what kind of market we are in? Are we in a trending market, or we are in this market where you will crawl? It would be 2 steps forward, 1 step back. So the trend would be higher, but it's going to be a crawl, not a frog, not a giant leap forward.
I feel that it will be calibrated. As I said, it's not going to be runaway. I think like the next area is 19,850, then we've got 20,200. These levels are there. But sooner or later, Nikunj, I feel they'll be taken out, because as we are positioned, we've had a correction. It's great. It's always good to have a correction because, things were getting too euphoric and a lot of stuff was moving. That's all corrected. But as I said, the quality of correction is very important. And, as I say, I love to do my research in corrections, because stocks that fall less in falling markets are leaders of the bull market. Markets that fall less, and as I said, India was a leader, And I think it's showing the characteristics of leadership. And where leadership was visible in India also continue to show. You know, if the Nifty would fall 7% and everyone were unanimous that small cap is a bubble, that its excesses have happened, small cap should have at least fallen 10 to 15%. It should have
fell
fallen.
about 3% only, right?
It fell about 5%.
5%.
And I think we are just maybe 1 or 2%, depending on give or take where we are today. So the fact is that, and I have a thesis for that. I mean, we did some work. We realized that, hey, you know, what is it? Of course, the important thing is the FIs are selling, which tends to be in large cap, and domestics tend to buy. So that's, of course, that apart. But we feel that the sectors that are trending or sectors where the themes are, they hardly have a representation in the large cap index. If it's cap goods, engineering, infra, industrials, barring an L&T, which is a large cap stock, if you need to get into the sectors, you have to buy a small or mid cap. True. So if money flows into these sectors, as I said, we are trend investors and we see that the trends are in these sectors. Now, if I have to buy something in those trending sectors, I have to go to a small and mid cap space. And that the pressure that is there, the trends which are less relevant are going to be the private banks and IT. And if you look at that, they're all the biggest caps in the market. So it's actually the sectorial shifts that are happening in the market which is really causing for this kind of behavior.
So net what you're saying is that even at index level, if we don't run away to that 21,000 mark, it's the mid cap and small cap and these specific stocks which are likely to outperform. But talking about the trends, the biggest trend that we have seen this year is the real estate sector.
Yeah.
That's of course made a bit of a comeback. But given the fact, Atul, cycles are getting shorter, whether it's a bull cycle, whether it's a bear cycle.
Absolutely.
What about this real estate cycle? Because we've already seen this cycle turning for the last 2 years now.
See, again, the interesting part is in this fall, you rightly pointed out that the only sector that made 52-week highs is reality, right? So that is definitely one big positive. But the question is that, as to how big we make the frame. Let's go back 10 years and let's see how real estate has performed. So you'll find that actually the dog sector for the last decade, there were two dogs, I tell you. One was PSU banks. Yeah. They were the best performing last year and they're the best performing this year. And real estate is the last one, I think, left still. But you will realize that if you extend your time frame, you will realize that I'm not talking about 1 week, 1 month. Yeah, sure. But the fact is that when you have such a big revival in the market, when sectors after underperforming for a decade move, the rallies will not end in a few weeks or few months. They tend to be very elongated. And case in point is PSU banks. I mean, the trade of the last decade was long HDFC Bank and short any PSU bank. And if you see the trade of the last 2 years was actually the reversal. And we can talk about it today. But if I told you that 2 years ago, you say, listen, boss, what are you smoking up? Because it was a decadal move, you know. So it takes time. It takes time to adjust.
So what are you smoking up?
I'm a black coffee person, man. I love strong coffees.
But Atul, coming back to the PSU bank trade, there was a kind of crop of traders, investors who got in early, played the absolute low-hanging fruit, and then SBI, BOBs of the world went through a sideways kind of a...
Sure.
Is it providing opportunity to get in once again? Because it has not moved in the last 3-4 months at least, SBI, BOBs, but the numbers are supportive. Ownership has reduced a lot.
Sure.
You think it's giving time to get in once again?
I think so. I feel that what has happened is that they did run up, they surprised. They have corrected, every sector stocks have to correct. But as you see, I mean, I'm already seeing that right now, that in the last few days, some very good early breakouts are happening. So which gives me a sense that the next round also, these will participate and they have not topped out.
Mm-hmm. So Atul, actually I wanted to come back to the point. You talked about the dogs of the last decade. Which are the dogs you're identifying right now, which we'll talk about 2 years from here on? And what will make you comfortable on private banks? At what level or at what monitorable you will say that private banks are now perhaps looking attractive?
So my style of investing is I buy strength, I sell weakness. So at the end of the day, I do not know which sector when, okay? I'll wait for it to move. But my important thing is that what I look for, because at the end of the day, I'm a portfolio manager. I have 20 stocks, I have 20 bullets. So I really do not have the luxury of holding stocks for 2 to 3 years and waiting for them to bottom out. So I like to buy strength. So sectors that where we are seeing strength, I mean, we are extremely overweight electrical equipments, capital goods, infra. This continues to be our favorite. But where we are seeing interesting stuff happening is real estate. We are not overweight, we are underweight large private sector banks, but we are overweight NBFCs. We don't have any large cap IT, but we have some mid cap IT.
You don't own HDFC Bank?
I don't.
Very few fund managers don't own HDFC Bank.
I haven't owned it for the last 3 years. I think after the COVID fall, I haven't revisited.
So are they in this long winter, Atul, private banks?
One doesn't know, Nikunj. See, that is what time will teach you or history will teach you. We did some work, Nikunj. When I came in the market 1992, Harshad Mehta bull market, the Sensex had the top 30 stocks, right? As of today, only 5 stocks are still in the Sensex.
Actually less, I think.
No, I think
Tata Steel would be there.
the Reliances are there.
Reliance is there. Yeah, from the original, I think only 2 are left.
No, 5.
Okay.
From 1992, we've done work.
Okay.
We've done work. From 1992, Sensex, only 5 remain. And they were the best of companies. In fact, you'll be surprised that only 8 stocks have actually beaten the benchmark over 30 years.
Yeah, I mean, look at GE. I mean, you would never say that GE could actually be on a verge of collapse. And look at GE. So every company has a shelf life. Every
Premier
thing has a
Automobile,
cycle. Yeah, of course.
Hindustan Motors, they were part of the Sensex. In fact, these companies used to have waiting to get a car. You had to wait for months. And if I ever told you that, hey, these companies would not exist.
So Atul, money is not made by looking at history. Money is made by looking at future. So
Absolutely.
what could be part of the Sensex 3 years from now? That's a better question, right?
I think that's a very relevant question. And as I said, that what is going to really change is that the last decade was dominated by 2 sectors, IT and private sector banks.
Okay.
I have a feeling that a lot of sectors have been ignored. Like we spoke about real estate, we spoke about cap goods and infra. I feel that these will actually re-emerge and you will see a higher weightage or a lot of stocks would actually enter from this phase. So I do think that from what I read in the markets, I'm a student of the markets, that we are setting up for an industrial. See, that has eluded us the last decade. That is why these few narrow kind of defensive plays worked out. But the way the market is positioned, the way stocks are moving, the way the numbers are coming out, I think we are set for an industrial revival. And as I keep telling people, and I mean, it may sound a bit, boisterous, but I get a déjà vu feeling of the 2003 to 2008 bull market because the sectors and themes that are moving are very similar to what had happened then. Of course, we were in denial for a long period of time. It's only after 2008 that we realized, oh my God, it was such a big bull market. But I do get a sense that once an industrial revival happens, that's the potential and the kind of bull market India can see.
You know, I had the same chat with Manish Dangi yesterday on the similarity which everybody is talking about. And he gave a great counterpoint. I mean, something when you chat with friends, you realize that what the great counterpoint is. His point is that, guys, I know everybody is talking about 2003 to 2008 kind of a market coming back, but look at the index. And let's look at the 2-year index return. The index has not given great returns. So if you are in for that kind of an economy and if you are in that kind of a market, in 2003 to 2008 bull market, the index actually went from 5,000, actually 4,000 to 21,000. There is no evidence of that happening so far.
That is the perfect setup. That is actually the perfect setup. If I was talking to you after a 70% up move in the index, tell me what was my risk reward ratio.
So are you saying that we are in for that kind of a gain on the Nifty?
Yeah, I mean, I don't think in the 2003 to 2008 bull market, we are yet 2007. I think we are more towards 2003-4.
Wow, that's a big statement.
So what I'm trying to tell you is that always the returns that will come will be lumpy. And there is an alternation. If I was sitting on 70% return, my risk reward ratio would not have been in favor. The interesting part is that actually in the last 2 years, for whatever we are saying, the indexes have not done much.
Yeah.
We talk about real estate sector, what have these stocks done in the last 5-10 years? I mean, they have destroyed wealth. So the fact is that wealth was created in a few niche pockets in the last decade, so-called the 50 quality stocks or 60 quality stocks. The market is getting broad-based, and that is to the point we spoke about, the small cap index. If the Nifty fell 7%, the small cap index should have at least fallen 10%, if not more than 15%. And if there's unanimity that it's a bubble. So the fact is that the beauty is that we are coming off, I think, muted performances. And that's, if you have an industrial revival, the quality of rally and longevity of those rallies are always special.
Atul, I want to talk to you about this industrial point. If you could just pull up the capital goods index on a longer term frame, you would see that it started moving, made an all-time high, multi-year high, decade high, right? And then went to a sideways move because the large cap components, Siemens, ABBs of the world, came back, retraced. Perhaps a little more correction actually happened in the mid-tier engineering companies, mid to large. Do you see opportunity in mid to large ones or the top end of the capital?
No, I think there's a lot of opportunity there. I agree with you that some of the number of large caps in these spaces are so few.
Yeah,
that is why and that is why they have attracted those kind of valuations. But when you look at the mid and small cap space, you will find that the number of stocks are plenty. They have been underowned and ignored. And the interesting part is that these are the survivors. After going through the difficult time they have had, companies and businesses that have survived in this space are definitely the guys who are able to withstand difficult times. And I do think that they are going to be rewarded. And that is why you're seeing this kind of catch-up trade happening here.
So you've not held HDFC Bank for last 3 years, but which is one stock you will not sell for next 3 years?
I don't know.
As of today, if you have to take a view.
In my style of investing, as I said, I am a slave of strength.
Okay.
I realize that over the last 32 years, that ultimately the big wealth has been created in few pockets. And the quality that all these stocks showed was they continue to show strength. So I, for one,
Give me an example where strength has surprised you. Just we're discussing. It's not a recommendation. We're discussing one or two names to just establish the point you're flagging off.
For example, let's say electrical equipments, right? I won't take a name because I own the stock, but you'll realize it's a mid-cap space. But you realize that, hey, you know what of these companies which were unglamorous, boring, they went up. People say now they're at 40p, 50p, they have become very expensive. But these companies are delivering 30, 40, 50% returns. And what looks expensive one quarter suddenly looks cheap the next quarter. And as earnings keep coming, if you have an industrial revival, these companies will continue to surprise. And what people are scared to buy at 30p, 40p, because historically these have been 10 and 15p's. But the fact is, if the numbers continue to come, if they continue to deliver, that is really how bull markets are made. All great stocks you'll find that they have been expensive. Rarely have all the wealth creators been cheap. They have rarely been cheap. The fact is that these companies tend to beat. And when they beat, what looks expensive suddenly looks cheap. And that is what propels them from quarter to quarter, which becomes year on year. And that's how I think wealth has been created. So I'm one of those guys who's looking for strength. I'm looking for those companies that beat and that beat consistently. Because ultimately that's the characteristic of any wealth creator that you see in Indian stock markets.
Are you seeing any strength in the pharma sector right now?
I think there are very interesting places there. Again, this is a sector which probably from 2015 or so hasn't done much. All these big names, they have, I think once you had started having those US FDA problems, I think 2015, 16 or thereabouts, they have not done much. So I think they're very quietly moving. But what I find more interesting is the healthcare space. And there I like hospital stocks. We do have a fair allocation towards hospital stocks. They are not your typical pharma stocks, but I think that is another very interesting and secular play. Under the radar, under-owned, but I do think that is actually trending out very well.
Would you like to revisit your Nifty target of 21,500?
Not really, Nikunj, not really.
You want to extend it now because it's
in fact, that is when I would tend to be cautious when I get so myself, this thing, I realize, oh my God. It's typically that at 17,000 to say 21 is very difficult. So there's disbelief, then there's acceptance, and then you laugh about it. So when I start laughing at my target, I actually should be careful about it.
So 21,500, then when it reaches there, you'll take a fresh guard.
Yeah, we look at that. We look at new realities the world is see, and ultimately that number is not about that number. It was the direction.
No, just
21 ka 22 ho gaya, ya 21 300 bhi ho gaya. That's no big deal. That number is just as a signpost. It's telling you where the direction is, right? You have a North Star when you're a sailor. I mean, you're never going to reach the North Star, but the fact is, in which direction you have to go. And as an investor, ultimately, the question is that when there's a correction, am I going to buy? Am I going to buy on dips, or am I going to say, oh, it's too much, let me move into cash?
Pollution North Star दिखता कहाँ आजकल?
Holidays are on your mind, not sailing. All these
you don't see the North Star in so much. Bombay is getting polluted now.
Yeah, I know. Man.
So for those, now tell us a new strategy. North Star तो नहीं दिख रहा है.
North Star नहीं दिख रहा है.
Okay, before we wrap, let's identify it, and I'll phrase my question carefully here. The best trade according to you for next 3 to 6 months. 1 to 3 years and 3 year plus.
I think it's going to be the story that is linked to industrial revival. It is not the stocks that dominated the last 10 years.
This is 3 to 6 months.
3 to 6 months, 6 months to 1 year, 1 year to 3 years.
That's
Simple.
a standard. Okay.
I still stand overweight in the space, and as I told you that my style of investing is that I look for strength. The market is showing me strength. The numbers that are coming in this space, yes, things will change. Nothing is perennial in the market, and when they change, we are fast enough to change. We are flexible enough to change. We have no ego, no storytelling,
No, but asset
nothing of that
classes,
sort.
asset classes.
But genuinely, as a place, as a sector, as a theme, I really like stocks that have not moved for the last decade.
But any asset class allocation 3 to 6, 1 to 3, 5 plus?
I mean, sectorally, I think, as I've said, I like capital goods, I like infra, I like engineering, electrical equipment.
No, asset class, I mean outside equities.
I'm such an equities guy.
They
All
say
my life, that's the only thing I've done. I'm unemployable and useless in any other trade. Yeah.
On Diwali, it is a joy of giving. So if somebody says, Atul Suri, happy Diwali, please oblige us with a tip.
Diwali abhi aaya nahi hai.
Aane wala hai. You'll be traveling before that.
This is like stress. This is stress. Okay.
You know,
I haven't actually thought about it.
Okay, fair enough. But what I wanted to ask you, and I'm intrigued to listen to your views on this. You talk about trends, you're talking about capex, which is one of your themes. What about this premiumization and affluent India that we are seeing? Are you not interested in that theme? Are you okay to let go of that, or what's your view?
It's not that. It's ultimately, there are some themes that we have. We have some FMCG plays which are in the food space. It's not the soap and shampoo kind of.
Packaged foods and
Yeah, it's something related to that, etc. So we like that kind of space. We have some plays in that area, and I think that those are also interesting plays. So you can't really look at premiumization. I think the numbers will come, and then you'll realize that okay, there is something happening.
You use it on a consumer basis, but not in the market. The affluent consumer angle. But in NBFCs, which side are you liking it? Is it microfinance? Is it housing finance? Because
we like some of the AMC related
wealth management,
related, capital marketplace. We think that is the biggest tsunami that's happening, and we are very, very fortunate to be at a time when and I think you guys also, thanks to you guys, and you guys also are beneficiaries and the creators of that kind of awareness that investors are noticing, and that is really resulting in an amazing boom in the whole retail.
Would you buy a
investor
brokerage,
space.
AMC, or a wealth management company?
I think I would look at all three, or what are overlapping on all
Atul
three.
Suri is saying, don't ask me so many questions, just join my PMS. You get all the answers right now there. Right, simple, Atul.
Yeah, it's too much regulatory stuff. Can't talk about stocks, sorry about that. But we used to do that. I remember when we would, many years ago, openly talk, but now you have to be very
Now you have to really...
You have to be
Measure your
between
words.
the lines. Reality. It's a reality.
But not start with pollution, man. Trust me. That's the unfortunate reality, whether we like it or not.
Let's go to Ladakh.
So nice to have you.
Thanks,
And
man. Thanks a
you
lot.
for
Thanks, guys.
joining us.
Happy Diwali to all of you.